They're talking about going into Fort Knox. They've been there. They know what the deal is. I think they're going to come out and say Fort Knox is loaded with gold. We're going to increase the price of gold to $5,000 an ounce. Jack it up another 70%. They did it before. They'll do it again. And this way we get rid of our debt. We got the gold to pay for it. They'll make up anything they want. Again, quantitative easing. I thought the markets would crash in 2012. They didn't teach me about zero interest rate policy or a made-up thing called quantitative easing in Economics 101 or graduate school. They'll make up any crap they want.
Gold prices surged to an all-time high of $2,950 per ounce on Monday, February 24th, pushing its market cap above $20 trillion. Tensions between the U.S. and its trading partners have stoked fears of a global economic slowdown. While safe haven demand is certainly a driver, another potential catalyst could send prices soaring even higher: the revaluation of America's gold reserves. In this video, founder of the Trends Journal Gerald Celente predicts that the U.S. government might revisit Fort Knox and claim it is loaded with gold. He suggests they could then raise the price of gold to $5,000 an ounce, similar to how President Roosevelt increased it by 70% in 1935. While reflecting on the past, Celente recounts how his grandfather surrendered his gold coins only for the government to raise the price to $35 an ounce in 1935. The US Bullion Depository at Fort Knox, which houses the bulk of the nation's gold, has only opened its doors to non-authorized personnel 3 times in history. Firstly, in 1943 for President Franklin D Roosevelt, in 1974 for a small group of Congress members, and in 2017 for a delegation including Senator Mitch McConnell and then-Treasury Secretary Steven Mnuchin. Elon Musk has announced plans to conduct an in-person audit of Fort Knox's gold reserves for his cost-cutting operation, the Department of Government Efficiency, or DOGE. If the audit confirms the reserves, it could boost confidence in the U.S. government's finances. Conversely, if discrepancies are found, it could send shockwaves through global markets, adding further momentum to gold prices. Based on his assessment, Celente argues this maneuver could help the U.S. address its enormous $220 trillion debt. U.S. credit card debt has soared to $1.38 trillion, with many consumers relying on credit cards to cover basic living expenses. Unlike the pandemic era, when government stimulus allowed households to pay down balances, today's consumers are accumulating debt rapidly, with an $18 billion increase in December alone, a 20.2% year-over-year jump. Now we present the clips of Gerald Celente's insights from their recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
Trump is on both sides, a strong dollar, weak dollar, but the United States is still the major reserve currency. And it's not going to happen until BRICS makes something happen. And there's a wild card, and here's your wild card, and it goes back to gold and the dollar. The real United States debt is around $220 trillion when you put in Social Security, all the money that they owe. It's not 36, 37 trillion. Now they're talking about, we're going to go into Fort Knox. We're talking about gold and the dollar. As a kid, about 16, 17 years old, my father, may he rest in peace, out of nowhere. And he said, it was 1933, I went over to see you, and your grandfather was packing up all his gold. He had a load of gold coins. I said, Pop, what are you doing? And my grandfather said to my father, President Roosevelt wants our gold back, and I'm an American citizen. I'm proud to be an American, and I'm giving my gold back to America. My father said to him, what are you, out of your mind? Don't do that. He said, your grandfather started cursing at me in Italian. He wouldn't stop. My grandfather turned the gold in. They paid them $20, I think it was like 84 cents an ounce. 1933, when they turned it all in. You had to turn your gold in or else you went to jail. 1935, they passed the Gold Reserve Act. They drove the price of gold up 70% to $35 an ounce. So after they stole it from the people, they jacked up the price. Now I'm going back to what Trump's going to do. They're talking about going into Fort Knox. They've been there. They know what the deal is. I think they're going to come out and say Fort Knox is loaded with gold and We're going to increase the price of gold to $5,000 an ounce, jack it up another 70%. They did it before. They'll do it again. And this way we get rid of our debt. We got the gold to pay for it. They'll make up anything they want. Again, quantitative easing. I thought the markets would crash in 2012. They didn't teach me about zero interest rate policy or a made-up thing called quantitative easing in Economics 101 or graduate school. They'll make up any crap they want. So that's the kind of thing that I'm looking at. I think they're going to come in with the gold thing, say we're loaded with gold, and they're going to raise the price of gold.
In the interview, GeraldCelente predicts that the current educated, tech-savvy generation will help China dominate AI, potentially causing an overinvestment bubble and a dot-com bust in the sector. Just weeks into its newfound fame, Chinese AI startup DeepSeek is moving at breakneck speed, toppling competitors and sparking axis-tilting conversations about the virtues of open-source software. Drawing from the 2000 dot-com crash, Celente warns that an AI bubble burst could crash equity markets and drive gold prices higher. He remains bullish on gold, expecting the Fed to cut interest rates amid economic woes, weakening the dollar and boosting gold's value. The U.S. central bank held interest rates steady in its last meeting. It is expected to resume cutting rates in June and could reduce short-term borrowing costs again in September. J.P. Morgan said it expects gold close to $3,000 an ounce by the fourth quarter of 2025. Let's get back to the interview.
Let's go back to China. Again, as I said to you, in trend forecasting, all things are connected. Let's go back to 2000, 25 years ago. Slimeball Bill Clinton brings China into the World Trade Organization. Back then, look up the data. 10% of 18-year-olds in China went to college. Now, after 25 years of being into the World Trade Organization and their economy going in directions they would have never dreamt of before, because if you look at their GDP from 1970 to 2000, it's like that, and then it shoots straight up. Now, nearly 70% of 18-year-olds in China are going to college. What does this have to do with AI? Everything. Young people are AI, high-tech addicted. Now you got 1.4 billion of Chinese people compared to what, 330 million Americans? 335, whatever the number is, like something like that. 335 million against 1.4 billion. Everybody's, the young generation, they're tech addicted. They're going to, China, we are forecasting, is going to be the world leader in AI and high tech. And that's going to bring down these companies that have overinvested in AI. And that's going to cause a dot-com bust. And this is your Trends Journal when it used to be a quarterly. Now it's a weekly. And if you want to know what in the world is going on, it's the grand total of $2.56 a week, US dollars. Nothing. .com this. This is fall of 1999. .com overload will short circuit many high expectations for huge profits in internet commerce, entertainment, and a wide array of .com services. Following the holiday season, many of today's high-flying internet stocks, the hottest IPOs and newly emerging IPO wannabes, will have begun their deep descent from their overvalued heights. And we said by mid-2000, the fallout from the falling .coms will have worked its way through Wall Street. Right there. It fell in March of 2000, exactly when we said it would. The NASDAQ went down 80%. Again, trends are born, they grow, mature, reach old age, and die. The internet revolution was just born in the 1990s. There was overinvestment and over-speculation. It didn't mean it was going to end. And that brought the dot-com bust. The same thing with AI. It's just been born. AI is the future. Love it, hate it, want it, wish it, whatever. It's the future. But it's just been born. You don't invest in the companies of the new baby. You invest in the ones that are expanding. So we're going to look for a dot-com bust, which again will crash the equity markets. When the equity markets crash, gold prices will skyrocket. And as we said, when gold hit like $2,970 an ounce, we said this is going to be a correction. Nothing goes straight up or straight down. We could see it go down $200, and now it's down over $100. So you need corrections in this, but the long term, we're bullish on it. And what's going to make it more bullish, again, they're going to lower interest rates as the economy goes down. Again, in the magazine, each week we publish what's going on. Housing starts are way down. Consumer sentiment consumer sentiment in the United States is at its worst level since the depth of the COVID war in 2021, when everything was locked down. That's how low the consumer confidence is. So they're going to do everything they can to lower interest rates. The lower interest rates go, the lower the dollar falls. The lower the dollar falls, the higher gold prices.
Since the beginning of 2025, the gold market has experienced a significant increase, reaching record levels. Several factors have contributed to this bullish trend, including macroeconomic conditions, geopolitical tensions, monetary policies, and imbalances in the paper gold market. What do you think about Gerald Celente's prediction of a potential gold revaluation and the impact it could have on the global financial system? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.